The United States moves to double Argentina financing to $40 billion. Is this an economic strategy or maybe a political gamble? The Trump administration is preparing one of the largest foreign financing packages in recent United States history, a plan to double Argentina's financial support to nearly $40 billion. The move, led by United States Treasury official Scott Bessent, aims to stabilize Argentina's fragile economy and strengthen U.S. influence in Latin America. But critics warn it could blur the lines between economic policy and political intervention. So, what's in the deal? According to reports from Reuters, Politico, and the Associated Press, the United States has already established a $20 billion currency swap line with Argentina to help stabilize its peso. Now, the Treasury is working on an additional $20 billion in financing, expected to come from a mix of private banks and sovereign wealth funds. If successful, the total package would reach $40 billion, a sum nearly equal to Argentina's entire foreign reserves. Unlike traditional IMF-style bailouts, this plan leans heavily on private market participation, with Washington serving as the central coordinator. Why now? Argentina's economy has long been teetering between crisis and recovery. Sky-high inflation, currency collapse, and mounting debt have eroded public confidence. By offering a financial lifeline, the Trump administration hopes to stabilize the peso and rebuild Argentina's liquidity, support President Javier Milei's pro-market reforms, which are viewed in Washington as a model for regional economic liberalization, and, of course, counter China's growing influence in Latin America, where Beijing has made major infrastructure and lending inroads. Bessent described the initiative as policy-specific, emphasizing that United States support really hinges on Argentina maintaining strict fiscal discipline and sticking with free market reforms. The proposal isn't without controversy. During a recent meeting, President Trump reportedly told Milei, "If he loses, we are not going to be generous with Argentina." That remark sparked criticism both at home and abroad, raising concerns that United States financial aid could end up being tied to Argentina's internal politics. Domestically, the plan has drawn mixed reactions. Polls show that nearly half of Trump's own voters actually disapprove of sending tens of billions overseas, especially while many Americans are facing high living costs and unemployment. Critics call the move inconsistent with America First priorities. While the financing could bring short-term stability, the long-term impact remains uncertain. So, effectiveness. Can cash infusions fix deep structural issues, or will they just delay another crisis? Then there's moral hazard. Large sums often benefit investors and elites more than citizens. Political volatility is another concern. If Argentina's reform agenda falters, U.S. backing could quickly turn into a liability. And regional perception. Other Latin American nations may view this as Washington reasserting dominance rather than offering partnership. For Washington, this isn't just about Argentina. It's about redefining influence in Latin America. With China expanding its reach through loans and infrastructure deals, the U.S. is positioning itself as the region's alternative financial partner. If Argentina successfully stabilizes, the move could mark a diplomatic win and demonstrate that U.S.-led market reforms can still work. But if the plan fails, it could reinforce perceptions of external manipulation and deepen anti-U.S. sentiment in the region. So what should we watch for? First, the final deal structure. Will private lenders commit, and will U.S. guarantees be required? Then, Argentina's inflation and growth. Signs of stability could justify the bet, but continued turmoil would definitely expose its risks. Public and congressional response is key. Domestic backlash could influence future U.S. foreign financing efforts. And finally, regional ripple effects. Neighboring nations may shift policy directions depending on Argentina's results. The proposed $40 billion financing package represents more than just economic aid. It's a high-stakes geopolitical maneuver. On one side lies the promise of stabilizing a partner nation and expanding U.S. regional influence. On the other, the risk of overreach, backlash, and political entanglement. Whether this move becomes a case study in strategic foresight or political hubris will depend not just on Argentina's reforms, but on how far Washington is willing to go to shape the outcome.